So we closed a little bit above the average expected move today, climbing 103 basis points versus the expected 78. Obviously, market makers losing out a little bit on the upside move there, but some weakness into the back of the day kept bulls off of their price target of 750. While in the money calls bought Friday and this morning were able to hold price action up after the initial rally at like 10:30 this morning. This puts us a little bit above the 67, 66 breakout, but still well below the reversal point up here at like 6,800. Um, Obviously, a fall back here could continue to fall back to trend. Important levels to watch to the downside on ES are going to be 67, 66, and 67.50. A loss of 67.50 opens up a retest at the prior week close. If we fall below that like 6,700 level on ES, things actually start to get pretty bearish again, and you start to get a breakdown of what is kind of an expanding wedge here. Um, Generally, I mean, this is what we're seeing here. This price action is indicative of an increase in realized volatility. Even if we're seeing, implied volatilities decline. So that means that, if historic vol is staying elevated, the opportunity for implied vol to snap back is very high. Um, Dollar moved up a tiny bit today, not too much, but still continuing its bounce from Friday. Yields mostly across the top end declined, but the 3 month as well. With the 6 month, 2 year, 5 year underperforming. Correlation snapped back super hard between Friday and today, and that just people continued to push into the short end of dispersion. As you can see, core 1 month declining at a significantly more rapid rate than 3 month correlation. A lot of this is probably due to earnings coming up. Remember, we have tech earnings this week and next week. And then Nvidia further out in the quarter. But with tech earnings coming up, everybody's going to want to ride the increase in volatility um, on the underlyings, and that means that it opens up an opportunity to short vol on the indexes, at least in the near term. And we're seeing that obviously a little bit more aggressively in the near term than we are in the 3 month. Um, commodity futures up quite a bit, mostly on the back of precious metals, copper. The move up in agricultural commodities, but oil's still down a little flat. Nat gas moved quite a bit higher today, though, which was definitely something to keep an eye on, especially in regards to inflation internationally. 3 month correlation declining, but bond volatility remains fairly fucking flat. Um, Forward yield on volatility back to negative 4.23%. I think it ended last week just slightly positive. And we see leverage on the carry starting to drop off into the back of the day after running up over the last 2 days. So it may be, if we're keeping an eye on that carry leverage in relation to the forward yield on vol, as that leverage continues to decline, that we start to see volatility tick back up, and it doesn't look like the 10-2 increases are really shifting. So if we continue to see the 10-2 climb, then that demand for long vol is going to continue to push up as people move more heavily into bonds. Skew climbing, it's like the third day in a row now, fourth day in a row. I think we've seen skew continue up. So I think that out of the money put demand is there. But probably, short puts in the short term. So uh, correlation fell for the first time in several days. I think it's been rising pretty steadily since like October 2nd. And so this is the first day we've seen any downside move in that correlation. However, correlation is still, only like 83%. There's plenty of room for it to move more positive, which may be, the next leg up we see in volatility if we do get one. However, with correlation falling, I would be careful going long vol until it's priced a bit more fairly. Um, Fed fund futures relatively unchanged, I think, for the day. Not much going on there. Um, the 10-2 curve dropped by about 4.39%. And we see a bit of an uptick in leverage just today. So slightly bullish, but still lower than our prior high. And S&P also still lower than the prior high. So some leverage picking up, but not necessarily a whole lot. Today is our first close above the 20-day moving average, which is slightly bullish, and should open up an opportunity to retest the all-time high, if not push up past it. And that would give us, upside targets in the range of around 6,800 out to about 6,836. In the short term, and with no data this week, I think there's a very good chance that we could continue to see, implied volatility fall, and that opportunity to short it will increase. However, Tesla earnings could be a break point for that. If the earnings are a big miss or a disappointment or guidance isn't what is expected, that could weigh on some of the other tech earnings. However, Tesla isn't as related, and so while it might do some damage to NQ, it's unlikely to shake the dispersion trade out. And you would really need like, Amazon, Google, Apple, Microsoft, those earnings to shit the bed in order for anything substantially bad to happen. So I think dispersion's likely to stay high. Obviously, keep an eye on the 20-day moving average. That's a pretty good confirm for downside. And then just probably expect more upside as we continue to gain positive gamma and things become more stable and some of that pinning comes back in the short term. Yeah, Gamma Strike now has a YouTube channel where you can check out a couple of videos that we've posted on the UI and episodes of Vol Stars. Yeah, I stick to the daily time frames for moving averages. I mean they're fucking useless on shorter time frames. Even here, I'm not a huge fan, but at least they're so fucking smooth that it's like somewhat reliable. Anyway, that's about it. So thank you guys for tuning in. I will see you all tomorrow. Have a great night, guys. Later.